Welcome back. Now, market conditions have certainly changed over the last few years, and this year is certainly no different. We're still focusing on COVID-19, even if it is, of course, the biggest news-making item across the globe. But questions around the tech sector will remain at play at present. Yes, having risen superbly last year, will that continue to be the case even in this year when things are perhaps changing when it comes to regulations and the like as well? The Chinese growth story continues to be one to focus on as well. Perhaps they're getting into a few more lockdowns, which has meant that market could certainly change and begin to look very different, particularly when it comes to that lockdown and what it does for growth and manufacturing across that segment. Locally as well, that has certainly been a similar picture too. Let's take a look at what the market sort of looks like as well then this afternoon. Well, in the Asian picture, the Hang Seng and the Shanghai Composite, as I noted a little bit earlier, pretty defensive really for the most part, having climbed to those record highs just last week. It does seem to be a little pullback then for the market this morning, as well as where it sat around 0.25% weaker for the Shanghai Composite, only the Nikkei managing to eke out a bit of a gain there. Mixed picture out in Europe though, with the FTSE 100 and pretty much the DAX are really flat for the most part. I mean, those are marginal gains really across the board out on this one, with the CAC 40 only managing just over 0.1% in terms of gains there as well. So perhaps some positivity slipping through there. We're up 0.33% on the local index though in this lunchtime trading picture. So perhaps we're going to continue to get to some record territory, perhaps 63,736 points. We're up more than 201 points, and a lot of that then is actually led by the resource shares, which have gone up nearly 1.5%. Look at that. Platinum miners are the big gainers today. The likes of Redefine, the likes of Anglo Platinum, Implats as well, going up there as well. Massive gains across those big sectors, which does mean that it pushes the resources higher, which in itself then helps the JSE All Share also track a little bit into positive territory. But unfortunately, with industrials going down 0.2%, as I added, the tech story is one to really look towards. Then, of course, Tencent being a part of that industrial sector locally here. And of course, let's remember that Tencent story follows through on Naspers on the local front. Naspers does have a massive proportion of that Tencent shareholding, just around 30%. And if that goes down, it does mean that Naspers also goes down. And that's pretty much what affects the industrials massively. So that's why we're seeing things go like that. Financials are also down though, 0.7%, and that's led by the banking counters, which have lost 1.4% in today's trading picture. Let's take a look at some of those shares. As I mentioned a little bit earlier, Redefine is the biggest gainer thus far today, 6.1% higher. Just below that, of course, the likes of Amplats, Sun International, and even Altron. In terms of the negative stocks, all of those sitting in red. Well, Astral is sitting in red, unfortunately. So too is Tiger Brands and the likes of Nedbank and First Rand, noting out again that those banking counters are suffering. Even Capitec is sitting down, and that's nearly 2.4% weaker in this afternoon trading picture. Here we go. Commodities. Well, Brent crude is up around 0.25%. It is sitting and continuously going to levels that we haven't seen for perhaps more than a year right now. $56.71 a barrel for Brent crude oil there. Just down as the gold price, around 0.1%, with platinum also going down nearly 0.4% too. Quick look at that currency picture then. If you still take a look at the bottom left-hand side of your screen there, still the South African rand against the US dollar is weaker, in fact, 0.4% there, and that sits at 15 rand and 31 cents against the US dollar. It's 18 rand 64 for a euro and 20 rand 92 then for a British pound. Very interestingly, as well, as we've continued to track Bitcoin, it's up around 0.25% today, $86 in fact, now sitting at 34,762. Makwe Masilela from Makwe Fund Managers joins us this afternoon as we get to grips with this market picture. Makwe, thank you so much for the time, man. So, very interestingly enough, we're still looking at vaccines. Of course, COVID-19 continues to be the bearer of all things right now. But what would you say is perhaps the key focal point for markets today, particularly on the global front?
Yeah, good afternoon to you and to the viewers. It all boils down to what is happening with the rollout when it comes to the vaccines. We've seen the US also said, listen, whatever that we've been putting aside for the second round, please get it out and make sure that we speed up this whole vaccination. But yeah, COVID as it is, there's the positive side on the vaccine part of things. But when you look at countries like Germany, the likes of Netherlands, now starting to impose also more stricter regulations, and even the likes of Austria, and hey, the third largest economy, Japan, I mean, we know that they extended that state of emergency, and so far it seems as if it will go outside even Tokyo, and as a result, it can even cover up almost more than 50% of their economic activity. So that continues to be a tug-of-war between the good news when it comes to COVID-19 because of the vaccine, but also these new infections going up every day. It continues to be more of a concern. But markets being markets, they're hopeful that Joe Biden, as we've seen now that he's controlling both houses, that definitely will put more money, stimulus into the economy going forward. So that probably will help. And for equities, which are risky assets, in an environment where interest rates are so low, they continue to be attractive because they offer a better return. So that as well continues to boost our equities. Hence, we see that we get the days where we reach record highs, and even when we get to be down, it doesn't have to be that too bad, meaning that the people are still hopeful that things will recover going forward, whether it's going to be the third or the fourth quarter of this year, but people are hopeful and pinning their hopes on the rollout when it comes to the vaccine.
The hopes, though, I mean, we're a year after the fact, right? And here we sit with a few vaccines, perhaps a little more knowledge when it comes to COVID-19, but it still seems like we're back to square one. A whole host of lockdowns across the globe, as you noted, with, of course, stimulus still being the question at hand for many economies, even here in South Africa somewhat. Do you think the market is anticipating now that things will get worse or perhaps a little bit better?
They hope that it will get a little bit better, but as you know, that we hope for the best, but we plan for the worst. So one is not ruling out that we might have the issues of like the third wave going forward, but we hope it doesn't get to materialize. But you are right, we know better about it. Immune systems are much better. The recovery rates are even impressive, even though we see new infections going up. So that gives people a little bit of a hope. And even when we see governments reimposing restrictions that are not as harsh as they were, I mean, during the likes of, say, April, May last year. So it shows you that some economic activity is still happening. So we don't expect any country at this rate to close off all the economy 100%. So that should be helping. And as we've seen as well with our extended level 3 back home here, I mean, most economic activities are still continuing. We know that sectors which are unfortunately being closed, but it's not as bad as it was like during May, April, June, stuff like that. So that gives market players some hope. Bearing in mind that markets are forward-looking, so they've looked past all this. Look what happened with the violence that we've seen in Washington. Markets managed to look past that. Today or tonight, we've got a vote when it comes to the impeachment of Donald Trump. Markets, they're also looking beyond that, saying that we don't expect anything much to happen, even if they have to impeach him. But it might be a question of the guy not being able to run come 2024 if he was intending to run.
Yeah, that's certainly going to change things a lot for him in that regard. Okay, let's talk commodities very quickly. The oil price jumping to levels we haven't seen in over a year. It's at pretty much pre-pandemic levels almost at this point. Could it get better and better? I mean, considering the fact that Saudi Arabia not so long ago said, yep, we'll maintain supply for February and March as well. And demand could begin to pick up if economies begin to open up a little bit too.
Definitely, but what needs to happen as well is the aviation, because jet fuel plays a very critical part on that. So the minute we start seeing people traveling freely, then that will help demand when it comes to jet fuel, then it will help oil prices going forward. And Saudi being the de facto leader of OPEC, we think that maybe other guys will follow suit, because as you said, the guy decided to cut almost 1 million barrels a day, when it comes to February and March production. So maybe other guys will join as well, and that will help when it comes to the issue of oversupply. So if you have that, when you have productions being low or people are cutting on production and there's a pickup when it comes to demand, then that should help oil prices. And we've just seen what happened with Sasol, which happened to be our star performer so far this year, up almost 31%, mainly at the back of those good oil prices.
Very interesting, actually. All right. In terms of currencies, 15.31 for a US dollar. Are you a bit surprised by the weakness coming through when it comes to the local currency, or is it just because, well, the US dollar is just strengthening, or perhaps straightening itself out?
It's more a case of what is happening with the US dollar, and we are at the mercy of that. And it was all what was happening with the yields that we saw in the US, because when they expect to see more bond issuance, then that drove the 10-year yield up, and it managed to breach that 1% level. So that is telling people that we know that, remember, the 10-year yield is used as a benchmark for all the bonds. So it means even companies that have been issuing bonds, they will have to repay more when it comes to their debt. So that affected that, but it's a more play of what is happening with the US dollar, and it was also because of an issue. US dollar was mainly driven by the yields that you've been seeing going up. So it took a little bit of a breather yesterday or so, and we hope maybe it doesn't get worse, then maybe the rand will stabilize below those levels.
Yeah, we'll certainly hope so. Makwe, appreciate the time. Thank you so much for it. Happy New Year as well to you. We'll continue to chat to you, of course, throughout the year and continue to get your insights. Much appreciated. Makwe Masilela is from Makwe Fund Managers then joining us as we unpack that market picture. That rounds things off for me here on Point then for this afternoon. My colleague Nzinga Kunta will join you then to continue off and give you the rest of your news headlines until 3 p.m. Thank you so much for joining us. South Africa, please continue to keep yourself safe as much as possible. Wear your mask, sanitize, keep a safe social distance. It's a good afternoon from me and the team.